Let's talk through my favorite timeframes and how you can use multi-timeframe analysis to create a thesis around a potential trade or create a story about a particular chart. Before we begin, I just want to remind you that this presentation is not financial advice, and I'm not a financial advisor. So any trades you take using my ideas or indicators or these videos are your trades and your trades alone. With that, let's begin. All right, so let's talk about timeframes. There's no like holy grail time frame. There's no right way to do this. There's no wrong way to do this. It's really up to you. But I'm going to give you the ones that I like. So I've got these 6 modes for ATR levels. 5 if you have TradingView, but 6 if you've got Thinkorswim. And so for scalping, I really like the 3-minute. And sometimes, let's say it's SPX or Tesla, really high beta stocks, I will go down to a 1-minute to get a little more granular with the movement. But typically my scalping is on a 3-minute. So I just enjoy the fact that it's roughly, every 3 of these is roughly 10 minutes. Obviously it's 9 minutes, but you'll see in the next, I like the 10-minute chart. So it's nice, roughly every 3 you're kind of getting a 10-minute period, and roughly every 2 it's close to a 5. 3 is not too much noise, but not too little noise. It seems just right for me. And Ripster also pointed out that every 5 is a 15-minute, right? Which the 15-minute is super useful. So you can kind of count every 5 candles and kind of see what's happening on a higher time frame. So it's a very versatile lower time frame, and I really enjoy it for scalping. And sometimes I'll use it for day trading and kind of determining trend changes. But trend, that leads me to the second one. So for day mode, I like to use the 10-minute. I like to use the 10-minute time frame. And the 10-minute really gives a really clear indication of trend, right? And of course, this is chop, this is trend, this is trend, this is trend. And I've got my pivot ribbon, which is based off of Ripster's EMA clouds, slightly different kind of way of doing things, but the general principles are very similar. This is the 8, 21, and 34 pivot ribbon. You can see now it's starting to try to change trend on SPY. So in the morning, it was a downtrend. Now it's cutting through the EMAs and it's starting to base here above the 34 EMA. So now we're going to see what happens. Does the trend change? The 8 is now crossing over the 21. Does the 21 cross over the 34? And do we get a trend change? So I really like the 10-minute for intraday trend. I think it gives a clear example of whether you're in chop or if you are in, let's go back a little bit and see. This is clear trend to the upside, right? It's just continuing up, riding the cloud. This is chop. This is chop. That's trend. This is chop. This is trend, and this is trend, right? You could play that both ways. Chop. So it's really nice. 10-minute is a nice happy medium between the 5-minute, which is for me is covered by the 3-minute, and the 15-minute, which is also covered by the 3-minute. That's a nice happy medium between the two of them, and I find that it's really nice. It divides up the hour into 6 candles. It's great. I really like it for my intraday. Now, for the broader trend, near term, I like the 1 hour. Without extended hours on. So it's effectively like a zoomed in daily chart. You can still see all the gaps, which is nice because those gaps are always really important. Here we have on SPY, we've got some gaps here today. We gapped down. Yesterday we gapped down, filled the gap. Today we're gapping down. Let's see what happens. So this is really great. And I pair that with my multi-day levels. So these are weekly levels. Of course, the pivot ribbon stays the same on all of them, 8, 21, 34. Yeah, so, I love the 1 hour. It is really great for understanding kind of broader trends. Here's that big drop that we had on SPY. It went through the multi-day put trigger. Of course, you could have gotten in there for a swing. Just rode the 8 moving average on the 1 hour all the way down to additional key levels before coming up to test the 21 and then continuing down. So I find this to be really nice for longer term trends. You can see where it's sort of just consolidating. You can see when it's in trend. You can see when it changes trend. So it's really nice for sort of fluid near term trend. Now, if you want to get a little deeper into it, and let's say you're going to swing 2-3 weeks out, I really like the 4 hour. Now, the 4 hour is really good, and I pair it with the swing levels on ATR levels. I find that this is a really nice pairing where it's sort of halfway between, a full day and 1 hour granularity. Kind of gives me a little bit of in between. You can also use a 2 hour. That's perfectly fine as well. But I like the 4 hour. It splits the day in half. Of course, it's not exact. And so that's another thing for this multi-day 1 hour. You can also use a 65-minute chart if you want exactly even candles. And for the swing 4 hour chart, instead of 4 hours, you could do 295 minutes if you wanted to have exactly 1/2 of the day per candle. But I just keep it as the 4 hour, and again, extended hours off. And I find that works fine. You can see here it's showing a really nice trend kind of in the midterm. And you can kind of use this to manage your swings. Let's say you were in a low squeeze at the put trigger. You took this downside move. Maybe you scaled out. You left some runners, and maybe those runners stopped out here, or maybe you put the stop at the 21 and you waited and it stopped out here, or you took additional profit at other levels. There are lots of ways to play it, but yeah, I mean, this is nice. It's just clear trend down, never breaks the 34. If you'd held long enough and you felt like you could keep kind of deeper stops, totally fine. You would have captured a pretty nice move there. But yeah, the 4 hour is really good for swings. Swing levels, of course, monthly levels, so they change every month. So 4 hours gives you, roughly 40 candles per month, which is plenty of data to kind of understand where you're headed. Of course, there's another drop here, and we're kind of in the zone again for either a drop or maybe some consolidation here. All right, now let's look at the position levels, and the position levels I have paired with my daily chart, and this is where I live most of the time. Like, I really look at most tickers on the daily chart, and of course the weekly chart as well. But I pair the position levels, and in the past I've paired swing levels with daily and position levels with weekly, and I certainly will switch as well. So swing levels may start on the 4 hour, but I may put the daily chart on as well, and position may start on the daily, but I may put on the weekly chart as well. But generally I found experimenting recently, I found that this has worked pretty well. Of course, I will change these things in the future and I'll adjust, but generally the time frames I keep are the same. I just may pair them slightly different based on, trying to get a different perspective. But yeah, the position levels with the daily look, really good. Again, this is a quarterly ATR for the position levels. So you're getting roughly about 60 daily candles inside of each one of these ATR levels brackets, right? And of course, you can see here on SPY, this is the beginning of the year. We broke the pivot ribbon, we broke the put trigger, and of course, this was a nice swing play down to the downside. And we retested the EMAs, more downside, retested the EMAs, finally broke through in that March rally where the shorts, I guess, got crushed, and so it was just a massive rally for 2 weeks. But then, more downside continuation, never made a higher high, really just kind of touched the previous high roughly and then kind of moved back down. Rest is history. Similar situation here before the last CPI numbers, before the drop. So, daily chart is probably the most important chart. If you had to trade one for the rest of your life, of course, it wouldn't work for scalping. Maybe not. I don't know if anybody's ever scalped a daily chart. But like, you need to understand the daily chart to understand broader trends. And it's clear as day here. You can see this is where things started to thin out last year, right? We had a nice move to the upside. After that, September, October kind of crunch. We had a little move to the upside, one ATR, quarterly ATR move. And then it sort of peaked out, sort of chopping between these two levels, one ATR, the extension, and the golden fib, the mid-range, before it kind of broke down. And now you can see it's predominantly red and yellow, red and orange versus green and blue, which means, it's in a downtrend, a very clear downtrend. And of course, if you've been playing puts this whole time, you've been making money. And of course, on these rallies, you can make money to the upside as well too. And speaking of trend, that brings us to the long-term levels and the weekly chart. And the weekly chart is really important for understanding trend because it smooths out a ton of noise. And here you can see massive bull rally, for a year and a half. So long-term levels are yearly ATR levels. These are one of the newest ones that I built. And of course, you can see that it's showing on the weekly chart really long-term trend. We break down in the beginning of the year. It's not sure. And then, of course, now we've got solid downtrend basically since April. Some indecision here. And, of course, we saw that there was opportunity to make money on the upside and downside. But basically since here, and I pointed this out on Twitter, every time we touch the 8-period moving average, exponential moving average, which is the bottom of the ribbon, when it's bearish, it's, tested the 8, dropped, tested the 8, dropped, tested the 8, dropped. So we're in a very clear downtrend, and that provides opportunities to look at the weekly chart to figure out kind of, hey, am I at an opportunistic position to now look for an upside move or a downside move? Extended from the EMA's upside, but not necessarily, right? Doesn't mean this is very extended and it finally came back. So you got to wait for, break of a previous weekly candle before you get too excited. But yeah, anytime it's gone to the 8-period moving average, it's been a very clear short since April. So those are my time frames. And again, let's go through them one more time. So I've got the 3-minute on scalping and SPY's taking off right now. And we've got the 10-minute. It's trying to change trend. Got multi-day. Looks like it wants to go to retest an EMA. That makes sense. Also wants to fill this gap. So see, I've now gone from, hey, I'm going to take a position on this trade. What's going on? Like, what's my potential upside? We flipped trend on shorter time frames. Awesome. Conviction, arrows fired, ribbons flipped, riding the 8. It's a pretty good trade. Probably could have gotten in on this retest, but I was making a video with you. So, day mode and 8-hour, it looks like we may go and retest this put trigger, which makes sense, right? That's where we failed in pre-market. And now we're starting to flip trend on the 10-minute, which means intraday. That's great. Now we're extended, so I'm expecting, and we're getting wicked off here without, a big move. So maybe we get a pullback to the 8. And so we could look at that opportunistically as long as it holds as a potential place to enter a long position. But let's understand what's going on in the broader picture, right? It looks like we want to fill a gap. Looks like we want to retest that 8 EMA on the 1 hour. And so that might be a good confluence. So 377. Now let's go back a day to day mode. Yep, look at that. 377 is that put trigger we talked about, right? So multiple confluences, multiple time frames. You're building a thesis for what might potentially happen, even though you may be trading down here on a lower time frame. And look, we're getting a pullback, right? That's great. So, a lot of people get excited. They jump in here, but you're so far away from the EMA. Wait for a retest. If it doesn't happen, fine, the trade wasn't meant to be. But see, we're going to get that retest. It's probably going to come down to this EMA or this level. And if not, that's fine. There may be other opportunities to get in. Maybe you get above this level and you get a retest. But I think, waiting for a pullback to at least this level or to an EMA is probably a good idea. And see, look, while we're talking, it's starting to come back. Don't chase. When you're entering here, your stop is here, and then other people like me are entering here, buying your contracts that you bought here and sold for a loss. That's not great. Wait for a pullback. Enter on support for calls and resistance for puts. That's what you want to do every time. And support can be a level. Support can be an EMA. Support can be a demand zone or supply zone. Notice we're in a 10-minute supply zone here. Yeah, and so it's starting to fail here. So, you got to monitor all these things, but, if you had gotten in here, you're like, get excited. Oh, it's going to go up. Woohoo. I missed my entry. Like, next thing you know, you've hit your stop, right? And that sucks. And we've all been there. So it's not just you, it's me too. And sometimes I'll still do it. I'll get excited and get into a play and then, do something silly like that. But look, it looks like we want to fill that gap up to, 378, 377, 378. And it looks like it's trying to do it before maybe it heads down. And, again, that's below the 21. So we're still in a downtrend. So, those three during intraday, I'm scanning all three regularly. And, I'll go up to the 4 really for swings. Intraday, it's probably not going to make this move all the way. It might. Maybe it'll go back up to 380. But, you can definitely check the 4 as well and higher. But, for intraday trades, going up to the 1 hour is probably sufficient for most of you. When planning trades, of course, you want to look at 4 hour, and that's what I do anyway. And I like to look at the daily, right? Now, so daily, we're pretty extended again from the EMAs, but not super extended. Of course, we can go further. Things can always go lower, things can always go higher before they want to revert to the mean. So just because it's at a certain point away from the mean from the 21 doesn't mean that it's going to necessarily go back there right now. It can definitely go further down before it decides to come back up. Generally, it always comes back. That's kind of a simple rule, is that eventually it always comes back to the 21, right? 21, up, 21, down, 21, down, 21, down, 21 almost, down, 21, up, 21, breakdown, 21, etc. So that's why I call it the pivot ribbon, because it's pivoting around the 21 EMA. All right. And, of course, long-term time frames, we can see, all right, we're at this very key level of 370, which we've been consolidating between these two key levels on ATR levels. Long-term mode, it's been between those sandwiched, and we're still riding the 8 EMA on the weekly down. So this is telling you gravity is down. This is telling you gravity is up, right? Wants to pull higher, wants to pull lower. This weekly chart is very important. And the monthly chart is too. Of course, you can look at the monthly chart. I focus more on these lower time frames, but definitely when I'm looking at for long-term understanding of what's going on with a particular chart, I will definitely pull it on the monthly, and particularly the 34 EMA. Let's actually look at it real quick. There we go. So here's the monthly chart, still yearly levels, but you can really see like, hey, we're kind of testing, the lower area of the pivot ribbon, which is the 34 EMA, and it's sort of been consolidating right around there. Not looking great. 8 EMA is finally starting to curl and go to the 21. And of course, we've seen this before. This is the COVID drop, drop down to basically the -2 ATR yearly levels and then some before it came back up. And that was a pretty quick one, and quick down and up. I expect this to be more like 2002. Here is the 2008 financial crisis. You got a flip of the ribbon, and it actually had a downtrend on the monthly. So when you look back in time, this is the beast. I mean, everybody remembers this, and of course it's because it was fast, right? Massive move to the downside towards the end of 2008 when there was huge capitulation. But, here's 2000, big peak.com bubble crashes, and we get a downtrend before you get a double bottom effectively on the monthly chart, more than a double bottom. And then it sort of bounces back up. So monthly chart, really important too, but generally I'll spend more time on the weekly. It gives me a little more granularity, and since I'm not really I'm no longer a 10, 20 year investor in most stocks. I like short-term swings or near-term swings or day trading and scalping. I really don't spend as much time on the monthly chart anymore. So that's it. Final review, 3-minute, 10-minute. By the way, let's look at the 3-minute. Do we have an opportunity? Yep. So plenty of opportunity. You probably could have gotten in there. You could have gotten in here. You can wait still some more. It's starting to kind of, the wicks are starting to thin out and you got low volume. So may have already made most of its move in this group. You may want to wait for a little bit, wait for a retest, or go up on a higher time frame like the 10-minute and just see what happens before you get into a long position there. But anyway, yeah, let's go back. 3-minute, 10-minute. Sorry, looking like some squeezes fired there. And 1 hour, 4 hour, 1 day, daily, and then weekly. And those are my 6 time frames. Of course, on the scalps, I can also sometimes go down to a 1 minute. And this is effectively like the live chart, can watch the price action in greater detail. Works really great for, things like SPX, especially because if you're taking near-term expirations on SPX, it moves rapidly. And so, even these small moves on a 1 minute can be lots and lots of premium. So being able to monitor that, I think, is super helpful. And of course, other stocks, I don't know how Tesla's doing today, but Tesla's another one where it moves pretty quickly, so being able to get in and out of the trade is pretty helpful. That's it. Those are my time frames. I hope it's helpful.